Good afternoon and welcome to HYCM's online trading workshop with myself, Giles Cochran, Chief Currency Analyst here at HYCM. I just want to say hello to folks as you're coming in. Hi, Ayaz. Can you just let me know, guys, if you can hear me okay on the, so you can see my screen, if you can hear me all right. Just type a, yeah, Sammy, that's great. Thank you very much. That's lovely. Bengali, Jodev, Nim, obviously Sam, Van, hi, good to have you aboard. Hudson. Just as other folks are coming into the workshop, just go through the disclaimer. Just to make clear on the workshop what we're trying to do, as we're trying to do with the look ahead start of the week webinar. It's all about trying to understand for yourselves what is moving the currency market, so then you can make your own trading decisions. So the reason I have to say that is because some people sometimes get confused, and if you mention a currency pair or you mention stops, entries, or exits, people think, oh, that is, that's trading advice, or this is a signal service. The whole purpose of these workshops is simply to provide an education, which ultimately is much better for everyone, because it means you can go about making your own trading decisions. And when you start to see what's moving the currency markets for yourselves, then you have the conviction to take trades when actually I've really got a strong sense of what's moving this currency or commodity. And it's a principle that works for all sorts of different markets as well. So once you learn this fundamental way of seeing the market, then it stands you in good stead for investing, essentially. Okay, some folks have come in. I think we're pretty much everyone's here now. So the session ahead that we're looking at, the special topic we'll be looking for is what to look for with central bank language changes and rate statements. Okay, so yesterday we had the Reserve Bank of Australia rate statement that was out, so we're going to take a quick look at that. And what we're also going to do is we're also going to just go over, some of the kind of central bank language shifts that you need to look for. Okay, so that's something that we'll be covering during today. Handout for the session, if you go to the GoToWebinar control panel on the right hand side, you'll see there's a handout section, and underneath that handout section you've got a workshop guide, and this is particularly helpful. Now if you are here, can you just let me know if you're here from the Dubai event on the weekend? For those of you guys who don't know, there was an HYTM event in Dubai at Duke's Hotel in Dubai, and there was about sort of 60, 70 traders there. And so if you're here as a result of that event, could you just let me know in the question panel if you're here today and you were also there at the event? I think Jodev, I think you were. I recognize your name. And the question panel or the chat panel, you can just type it in there. Yeah, that's it. I thought you were there, Jodev. That's great. Yeah, that's super. Okay. Well, if you were there at the Dubai workshop, and obviously if you were attending for the first time, this handout was in the PDF document that you received at the workshop. Now, this is very simple, but it's actually a very helpful little document. And I was speaking to someone who's been using this, and the reason that it's simple is that I didn't want to give someone a huge document that's too difficult to use. This is just simple. It's just one page of A4, so you can just, okay, yeah, okay, thanks, Ayaz. Yeah, that's great. That's great. So there's 1, 2, 3, 4, 5 things to look at. So when you're looking at the currency markets, the first thing to do is look back. What we're trying to do, we're trying to identify recent sentiment by reading up on the last couple of sessions of market activity. And we want to identify what that key market sentiment is. Okay, we then want to look forward to see if there's any upcoming market events. They want to look at the charts. At this stage, we should have developed a bias by this stage for certain currencies. And remember, we're trying to pair up the weak and strong currencies. Then we want to look for key technical levels to enter, and then we can place our orders. Okay, so that's the kind of process. And then afterwards, we're looking at our risk. We're making sure that we're not over leveraging our position. And then we're also looking at the outcome of our trade afterwards. Did we follow the correct process? If not, why not? And how do you learn from what you've done? Okay, so that is the handout. And we're going to be going through that now. Okay, so hopefully if you were there in Dubai, this will be a helpful reminder for you. Okay, I'm just going to check. Oh, that's it. There we go. Just had a reminder on my phone going off, but that's fine. Any suggestions for any future topics, just email me there. It'd be lovely to have a message from you anyway. Just let me know how you're getting on. That'll be good. Now, the first thing we can be looking at is the Brexit latest. Now, Brexit is now being replaced by the pound election question. So the pound is now being traded on the UK election. Now, the UK election is due on December the 12th, okay? And I just, there's a resource here called Politico, which takes a poll of polls. You know, a poll is basically a snapshot of what the electorate is anticipated to do. This company called Politico, they have a resource which is a poll of polls. In other words, they try to take a poll of all the polls to give you a sense of what you think is happening. Now, this is the current state of the polls in the UK at the moment. This is the poll of polls. So the Conservative government is in the lead. Now, this is the way to understand this. As long as the Conservative government is in the lead, then that would mean that the pound is likely to find support, okay? Because if the Conservative Party is in the lead, if they look like win the election, then that's at this moment in time, that's positive for the pound, okay? A deal has pretty much been organised. It just has to be voted through. So a Conservative victory would almost certainly result in Boris Johnson's Brexit deal being voted through, and then the pound would rally on that relief, okay, because a no-deal Brexit has been avoided. Now, where it gets complicated is there's a number of different outcomes. So if the Labour government start increasing, that's going to be pound negative, okay? That's going to be pound negative because the Labour government are very, very left-wing. This particular Labour government is probably the most left-wing the Labour Party has been in its history. So in other words, it would be a massive shift for the UK politics. So if the Labour Party started winning and started getting in control and started to creep ahead in the polls, that would be pound negative, okay? Because the market doesn't like the things that the Labour government would do. It would be very, detrimental for UK business. Now, the Liberal Democrats, now this is complicated, they want, their specific policy is for Britain to remain in the EU, and they would cancel Article 50. So if the Lib Dems start getting higher, and if the Lib Dems and a Labour form an alliance, then what you'll probably see is the pound rally on the anticipation that Britain wouldn't even leave the EU, okay? But then soon afterwards, when people think what a Labour-Lib Dem coalition might be like, I'd expect the pound to be sold. So that's just to be aware of everything that could happen there. So a Lib Dem Labour coalition, if they agree to be together, which they're not agreeing at the moment and are unlikely to, but that could result in pound strength. So this is the poll at the moment. Now, the way the FX markets, has everyone else got my voice? There's a chap here, Bengali Kaba, he's not getting my voice. Let me just see if I can help you, Bengali. Try your microphone setting. Can everyone else hear me okay? I'll just try to send a message to Bengali for him to use his. Yeah. Good. Okay, that's good. Thanks, Jodev. Bengali, I think it's just you. I've sent you a message, and I hope you get things sorted out. Okay, so now these polls are changing, often. Okay, and so the way the market reacts to these shifts in the polls. So if all of a sudden the Conservative government pull ahead of Labour, then you'll see a temporary short-term relief in the pound. Remember, in Dubai, we were talking about short-term sentiment. This is the kind of thing that would give a short-term sentiment shift. So I'm just going to send you all, guys, a couple of different polls. Now, this poll here is the YouGov poll, okay? Now, this YouGov poll here is a popular poll because it's direct from the UK government, okay? So that is the link when you open it. And all you do, you go to here and you can see the political trackers, and there it's telling you, which party is in lead. So, 4th of November, we've got Conservatives on 38 and Labour on 25, okay? So you've just got to, you can use this as a resource. And let's see, how often is it? Is it 28 to 90? So it's quite frequently these polls done, okay? And there's various other trackers to use in different questions that they ask, but you can have a little look here, okay? If there was a general election held tomorrow, which party would you vote for? That's the question, all right, that people are asked. So this one is reported on Reuters, and it's read out on Rand Squawk. So in other words, this poll here gets a tremendous amount of coverage, and traders do react to it, okay? So I'm just sending you that poll here for your own benefit. So that link should have come to you now, and I'm also going to send you this poll. That's the poll of polls. I like the poll of polls because it gives you a slightly broader, okay? It gives you a slightly broader, outlook, okay? So I'll send that one to you as well. Just dropping that into you. So check your messages, because this should be available to you all now. Okay. Okay. Good. So, as we came to my desk this morning, where are we now with US-China trade talks? Well, in a word, the market is optimistic. We had Wall Street stocks were rallying yesterday, Asian stocks were rallying overnight, and European stocks were rallying at the start of the session. So this is the Asian overnight stocks. We had the Nikkei up 1.76%. Now the Nikkei, the Japanese index, was closed yesterday. So some of those gains were on further risk-on gains from yesterday as well as today. So that's where we saw a bumper recovery for the Nikkei. The Hang Seng was up 0.5%, just under. The Shanghai Composite up just over 0.5%, and the ASX Australia 200 was up plus 0.15%. So optimism is in the market, okay? So what we're trying to do when we come to the market, we're trying to look at strong and weak currencies. That's what we're trying. We're trying to find these strong and weak currency, Every time we want to find which currency is strong, which currency is weak, because that gives us the best currency pair that's going to have the most support to it, okay? So if we're taking a currency position, we want to find a currency position that's going to have the most buyers or sellers in our favor, because that helps us when it comes to executing the trade, and it means that our stops are less likely to be hit, and the currency is much more likely to move in our direction, okay? So if you just want to quickly turn to your handout, we've covered that handout here. So just quickly turn to that, and we'll start going through the key things. So the first thing we're going to do is looking back. We want to read up on the last couple of sessions, and we want to summarize that sentiment in a sentence or two. We really want to try and get a handle on that, okay? So in the Asian session, come to Asian equity markets, they traded higher, and the message that was clearly out on all the news feeds was it's on Brexit and US-China trade, was on US-China trade optimism, so not Brexit. And that's where we saw this increase in these Asian equity markets, okay? So that gives us a clue. We've got optimism here We've got the Nikkei up, nearly 2%. And remember, whenever a equity market is up about 1%, that's really when you want to pay attention, because when you've got a percent increase, that's just, really significant. So with the Nikkei up nearly 2%, that's showing you that's a strong risk-on tone in the market. Obviously, it was closed yesterday, but even so, that's telling you something, isn't it? Telling you that the market is positioning a certain way. As we covered in Dubai, why do FX traders care about the equity markets? Well, quite simply because the equity markets are giving us a gauge on risk. Okay, so when you've got a falling equity market, you're risk off. So if we went to here and we saw the Hang Seng was down 1%, the Shanghai was down 1%, we would be in a risk off market. But actually, we've got risk on market because we've got the equity market is rising. Okay, and the things you see when a rising equity market, this is a little intermarket correlation cheat sheet. Now you might recognize this from Dubai. You can take a screenshot of this if you haven't seen this before. But this is how it works. Okay, so if you've got a lower volatility index, you've got stocks will rally, commodities will rise, bond prices will fall, bond yields will rise. That's when you're risk on. Okay, so this is the characteristics of a risk on market. You're looking for increase in stocks, increase in commodities, you're looking for falling bond prices, rising bond yields, risk on. Similarly, the opposite is true for risk off. So if you take a screenshot of this, then you'll be better. You can take a screenshot of these two, and you can see how it goes. Okay, so for instance, just to show you how that works. So today we had a risk on market. So we're looking for a lower volatility index. And here we can see that the volatility index is lower, okay? It's down 0.39%. Stocks rallying. We had the Asian index stocks rallying. I took this a couple of hours ago, and you can see that the European stocks were rallying, okay? So you can see the green is increased, the red is a fall. And you can see that this is, broadly speaking, it's a sea of green, isn't it? You're also expecting bond prices to fall. Now, the bond price and the bond yield move inversely to each other. So when a yield's rising, the price is falling. Okay, so you could just say bond yield's rising, it doesn't matter. But if you look here, you've got the various bond yields, and you can see they're all increasing virtually without exception. Okay, so you're risk on. Okay, so that tells us a lot. Now, in risk on markets, there's certain currencies that act certain ways. So when it's risk on, you get higher yielding currencies like the Australian dollar, New Zealand dollar, and Canadian dollar appreciating, and you get the Japanese yen and the Swiss franc being weak. That's just what generally happens in a risk on market, okay? Similarly, if it's risk off, then you get yen and Swiss franc strength, and you get Australian dollar, New Zealand dollar, and Canadian dollar weakness, okay? So looking back to the Asian session, we saw Asian equity markets are higher on continued US-China trade optimism. So we're expecting Australian dollar strength. We're expecting New Zealand dollar strength, Japanese yen weakness, Swiss franc weakness, okay? There was further reports that the US is rolling back 15% tariffs on $112 billion worth of Chinese imports. That took effect from September 1st. So in other words, more good news if those tariffs get rolled back. So there's anticipation and optimism, but there is a slight question mark because not sure whether Donald Trump supports a move or not. So that's just something to be aware of, okay? The Reserve Bank of Australia has confirmed that the market is at a gentle turning point. Now that was coming out from the minutes from the Reserve Bank of Australia last night. Now I'm just going to call that up. Just going to go to their website. So here is the Reserve Bank of Australia website. You can just type it in, and this is the statement. Okay, so it's a good idea to read the statements in full. I'm not going to read the statements in full now because obviously, we're limited to time, but it is a good idea to read statements in full. And when you read the statement, this was the kind of the key aspect of it. So the easing of monetary policy since June is supporting employment and income growth in Australia and a return of inflation to the medium-term target range. Given global developments and the evidence of the spare capacity in the Australian economy, it's reasonable to expect an extended period of low interest rates will be required in Australia to reach full employment and achieve the inflation target. The board will continue to monitor developments, including in the labour market, and is prepared to ease monetary policy further if needed to support sustainable growth in the economy, full employment, and achieving the inflation target over time. So a couple of things to mention. The first thing to mention is they're saying that the easing of monetary policy has supported employment and income growth and a return of inflation to the medium-term target range. Okay, very good. So you could make a case here that the RBA might be about to go into pause mode. They might be saying pause. Now, they have said that interest rates will be low, and they've also said they are prepared to ease monetary policy further if needed. So they've spoken about a gentle turning point. See this phrase, signs of a turnaround, and that's sort of throughout the statement is that, you know, Governor Lowe has said that the Australian economy, he feels, has reached a turning point. So reading these minutes, this is the key takeaway. Okay. One, the labour market is important. The board will continue to monitor developments, including in the labour market. So it's given special attention to the labour market. That means that going forward, labour data, so that's employment, unemployment, full-time employment, part-time employment, all of that employment data is crucial to the Reserve Bank of Australia. So that tells us that the next time we have labour data out for the Reserve Bank of Australia, to pay careful attention to it because it's market moving. The market will be paying attention to that because the Reserve Bank of Australia is paying attention to that. Now also be aware that the RBA is quite pleased with the impact that there has been so far with the previous cut in interest rates. So the issue here is the RBA at a turning point or not? Now the market took this as a positive news today. So the Australian dollar was bought on the back of this rate statement. So that's just to be aware of. So the things you're looking at in a rate statement is you're looking for a focus of any particular, you know, metric. Is it inflation? Is it GDP? You can see here they've mentioned employment, they've mentioned inflation. Okay, so important areas to look at. Obviously, you also get some quite good summary on other issues in a lot of these rate statements. You might get a, you know, they sometimes give a bit of a, you know, summary of what's going on in the world or risks that they're looking at, and that can be very helpful, particularly if you're learning, you know, how to understand monetary policy. Okay, so there we go. So that means that going into the start of the European session, there was one currency pair that stood out, and it was very easy, quickly to recognize it. It was this, the Australian dollar. See, the Australian dollar was strong for two reasons. RBA confirmed market is a gentle turning point, and there was this optimism in the market about tariffs being rolled back and US-China trade optimism. So this meant that we should see strong Australian dollar, weak Japanese yen, because we're in a risk-on market. Okay, so we've got what we're expecting. So that means when we go to our, so let's just go now to we'll go through to our charts. Right, now, so what I was looking at this morning is I was looking at any pullbacks to this level here. I was looking for a pullback to 75 to look to initiate longs. Now, in the end, we didn't get it, but if we're looking forward, okay, if this mood carries on, where might we enter? Well, there's a couple of places that we might be interested in entering, okay? So the first place that might be interesting to enter, just using horizontal support and resistance, just find it, see that's okay, key level of, there's been some resistance there, resistance and support, so that's likely to be a support level. That you've got 75, that 75 level, the big round numbers are significant. So as things stand, that mood that was in the Asian session has carried on. So potentially a return to 75, I would expect to see buyers. The next level down will be this level here, down 74.67. That is also a pivot point on the hourly chart. So if you look on the hourly chart, you can see this level here is the pivot point for the day. So this low here, 74.70, will be another potential entry. So if I'm looking at potential longs for this pair, I look for potential longs here, here, and then looking for stops below the previous day's low. So 4th November, yeah, so stops just below here. That would be the sensible place to stop. So that's how I would put together. That's what I expect. I expect buyers here, I expect buyers there, and I expect stops there. So that's what we're looking for. Now, if you look at it going forward, if you get a breakout of this level, okay, if you get a breakout of that level, then the next move up is up to these recent highs and the big round number of 76. Okay, so you can see that if these highs break, we could well be looking up to another move up to the 76 level. Okay, so that is a key area to watch. So price is just retracing back a little bit, tends to in between sessions anyway, as particularly as London closes and US opens. But there is some key data ahead. So looking ahead, let's just go to Forex Factory. And let's just have a look at the data points that's coming out. So just get rid of that filter. Right, so this afternoon, what we have is we have the US dollar services PMI. This is the non-manufacturing PMI, service PMI. Now here, what we're looking for is if there's another slowdown there, that's going to weigh on the US dollar. Okay, so that's going to be in focus at 3 p.m. today. Now, you know, what the market wants to see there is a recovery in those numbers. That's what is really going to be good for risk. So that's one event to be aware of, and that could affect a risk sentiment. So, you know, you've got to be aware of that. And then we've got the employment data out for New Zealand. That's going to be a key data point, really important for New Zealand. So I would expect a potential fresh sentiment shift out of this data. So if you get a miss, particularly if you get a strong miss, like one currency pair I'll be looking at, if you get a miss there, I will be looking at the Australian dollar, New Zealand dollar pair here, right? All right. We'll go to the daily chart, because if we see a divergence between the RBA and the RBNZ, so if it's very bad employment data for New Zealand, looks like Reserve Bank of New Zealand want to cut rates, and then the RBA are keeping on rates, then we expect to see more upside and a potential breakout of these highs, moving back up to 1.1100. Okay, so that is a level to watch if we get a very poor data out for New Zealand labour information. Okay, so it would be a break of these highs. Okay, it will be a break of those highs, and the next stop after break of those highs will be up to 1.1. That is what I'll be looking at, but that is not for now, because because that is at 9, so that's 9:40 this evening. So that's well worth looking at staying up for me here in the UK, and one to be aware of. Okay, if you can get to that, because potentially if you get a poor data point out here, you would get probably a phase 1 move out of here. So you would get a sudden move up on the Australian dollar, New Zealand dollar on a weak New Zealand labour data release. Okay, so that's a couple of things. Yeah, the sentiment for the US session at the moment, I'm just going to check my news feeds. Let's have a look. Yeah, then, yeah. So risk is still on in the market. Obviously, the thing to be aware of is if we get any negative US-China trade or Brexit news, that would be very bad. Okay, and that would weigh down quickly on the Australian dollar Japanese yen pair. So if we got any negative US-China news, say President Trump comes out and says, you know, I'm going to put more tariffs on China, or phase 1 trade deal is not going to be happening, that's the kind of situation where you would get a very fast move. And so what you'd see, let's see if I've got that here. What you'd see in such an example, the go-to currency pair for me is the Australian dollar Japanese yen pair, right? Because if, you know, phase 1 trade deal suddenly doesn't look very convincing, then you're going to go straight down to 74.50 quite quickly. And then once that level is breached, and if that level is breached, it's the 74 handle is the next area to go to. So that's what to be aware of. So what you're looking for here is, yes, Australian dollar Japanese yen buyers on pullbacks, but if all of a sudden there's some negative US China or Brexit news, then you would expect the yen to be bid and bought, and you would just see it bought very quickly. So just to be aware of that issue. Okay, now guys, what are there any trades you're looking at the moment? What trades are you guys focusing on? If you want to put it in your question panel, we can have a little look. Okay, New Zealand US dollar. Okay, nice. Let's have a look at that, Sammy, for you. So, New Zealand US dollar. Okay, so with the New Zealand dollar, we can see recently the New Zealand dollar has been bid. That's because when it's risk on, we tend to see New Zealand dollar currency being bought due to its high beta status. So the first thing to be aware of with the New Zealand US dollar pair is risk tone. So if risk is on, then you'd expect New Zealand dollar buyers. If risk is off, you'd expect New Zealand dollar sellers. Okay. The main event that's happening for the New Zealand dollar now, Sammy, is Q3's employment report, and that's going to be released this evening, my time, the start of the Asian session. And this event could be the decider on whether the RBNZ eases or not. Okay. So the unemployment rate is expected to go higher from 3.9% to 4.1%, and job growth is expected to slow, isn't it? Let's have a look. And job growth is expected to slow to 0.3%. I've got on my feed from 0.8%. Okay. So the risks for the New Zealand dollar is to the downside. So trading the New Zealand US dollar at the moment, you can see, okay, the risk is that more people are unemployed and the employment change is marginally just above zero. Okay, so the market is quite negative. So a disappointing report here would confirm the market for a November rate cut, and then you're going to see some New Zealand dollar US dollar downside then. Okay, but if there's an improvement, then you'll see the RBNZ holding from a rate cut, and you see that supporting New Zealand dollar. Obviously, you've got the US dollar side of the equation here, Sammy. So you need to be aware with the services. data coming out. So there's quite a few different variables for the New Zealand US dollar. You've got the services data coming out this afternoon, and you've got the employment data this evening. And the expectations are going to be moving that New Zealand dollar, whether it's risk off, risk on, risk off. If it's a really bad data release, a bad one, then that will be taken by some as confirmation that the RBNZ will cut rates going forward. Okay. Key support is down here, 0.6400 handle, and you've got a key resistance up here, 0.6460. Let's just have a quick look at the daily chart. Okay, so there's a bearish engulfing bar here on the daily chart. So Sammy, looking at this technically, we've got high here, rejected. So you rejected once, twice, three times. You formed a bearish engulfing bar. So you got a bearish inside pin bar forming. So what I would be looking here for, Sammy, is if there is a really disappointing data report, then for employment data, and if it's you know, a good data release for the services PMI data, then that would support New Zealand dollar US dollar shorts. So a simple place to enter in that scenario would be entering on a break of the high, of the break of the low, stops above the high, and then an obvious profit target would be this 0.6350 level, which is the resistance support, just this level here. So that's the sort of things. It's the sort of things that I'd be looking at. But you know, rejecting that 100 exponential moving average. And what have you got? You've got a pivot point up there. Yeah, and it's on a pivot point, so it's on a daily pivot point. So there's a lot of factors there, but I think the employment report will push that one way or the other, Sammy. Euro US dollar should. So does that help? Just a few thoughts on that. Okay, so the euro, there's not much going on for the euro at the moment. We know that Christine Lagarde has just taken over from Mario Draghi. She was speaking yesterday. I thought that might be quite a market moving. It wasn't at all. She barely mentioned anything on monetary policy. So it'd be interesting to see how she, you know, takes her role at the ECB. But the euro is pretty bearish at the moment. Okay. We've seen some US dollar strength yesterday, and some of that US dollar strength was mainly due to the euro US dollar and pound US dollar weakness. So the euro US dollar pair is, for me, you're going to be looking at the manufacturing services, the non-manufacturing, the services data out this afternoon. From the price action and from the fact that I'm expecting the US dollar to weaken, then you're potentially expecting more upside. But for me, the path is unclear for the euro US dollar pair. I'll be waiting, Chibivan, for some, you know, more confirmation of either euro weakness or US dollar strength. So for me, the US dollar is really data dependent at the moment, and the euro is very well depressed, but it's hard to see what the ECB are going to do extra without something new being announced, without some kind of a fiscal stimulus. So the US dollar side of this is that last week the Fed paused in easing and said rate hikes are firmly off the table. So that's kept a downward bias for US monetary policy outlook. So that would favor euro US dollar longs. And also US dollar would be bid on a safe haven play. So there's a lot of variables. If there's a deterioration in US-China trade talks, expect the US dollar to be bid and expect to see more euro US dollar downside. Key support down here, 1.100 level, just below, just here at the 1.1075 level, and you've got key resistance just up here at the 1.1200 level. So Chibivan, what are you? Are you short or are you long euro US dollar? Long, yeah. What you're going to, it's going to be the manufacturing data out in a couple of hours. You know, that's going to be key. Okay, it's just over an hour's time. You see, the last data release was one of the lowest since 2017, and this data release was a concern along with manufacturing being poor. So an uptick there will be supportive for the dollar for risk. What's difficult with the US dollar is that sometimes the US dollar is being bid on like as a safe haven currency, and sometimes the US dollar is being bid because the US economy is improving, and it can it can chop and change a little bit. So it's a little bit tricky. That's some of my thoughts on that, Chiro. So that's not that helpful, but that's just some of my thoughts on euro-US dollar pair. Okay, guys, I don't think anyone else has got any other questions. Yeah, I'll just quickly cover risk. Don't forget with your risk, for those of you guys who are with me in Dubai, if you're really struggling with risk, maybe you've blown up a few accounts, lost more money than you'd like to, then one of the things that I'd recommend is using a very little leverage in your trading. So for the fund that I trade with, I don't use any leverage. So if using no leverage means that if you had a 10,000 US dollar account, you would only use one mini lot, okay? Or if you had a 100,000 US dollar account, you'd only trade one lot. That's what it means to trade without leverage, because in those situations, your trade size matches your account size. So if your trade size is 100,000 units of currency, then it matches your account size, which is 100,000 units of currency. Similarly, if your trade size is 0.10 lot, 10,000 units, then that matches your account size, 10,000 units of currency. So that's just one little tip. If you've been losing a lot of money, or you're finding it hard to think about your trading, deleverage. And the more you can deleverage, the easier it makes for you to think. Okay, guys, that's been good session. We've covered a lot. Look for that risk sentiment coming on. Okay, look for the risk tone to keep dominating, and watch the equity markets for hints that it's fading away. Okay, and the equity market usually gives you a really good lead on that. Guys, good to have been here, and look forward. I have to say, next week I'm not here again. I'm afraid I'm in Malaysia next week, taking another course for some aspiring traders in Malaysia. There's one of our offices is opening there, so they've asked me to go down. So I won't be here next Monday or next Tuesday, but why don't you use it like for an opportunity for yourself on Monday? Have a look ahead, see if you can analyze and work out what are the main events, what are the most crucial events going to be, and keep trying to recognize the strong and the weak currencies. One to look out for this afternoon is that employment data for the RBNZ. If that's bad employment data, then I would favor Australian dollar, New Zealand dollar longs. So that's what I'm really looking at now. The trade I will be looking at is this one, Australian dollar, New Zealand dollar, if we get poor employment data. And then potentially got a large run there up to the 1.100 level. Okay, so that's something to look for. Okay, guys, you have a really good rest of the day. Been good to be in touch, and I'll speak soon. Thank you now. Goodbye.